From the trading desk of Daily Forex, this is Christopher Lewis looking at the upcoming November 20th trading session. I have a little bit of an odd pair in front of you. This is the Canadian dollar Swiss franc, but I find it interesting because you have to think of the background here. We have oil prices that simply cannot find buyers. Yes, they're finding a little bit of support at the $40 level, but that's it. So that should be negative for the Canadian dollar. However, you can clearly see that we've broken out to the upside, and I should point out that right here we have the 200-day exponential moving average. It's a moving average that long-term traders tend to pay quite a bit of attention to. Above it they buy, below it they sell. You can see that it acted as dynamic support recently, and we broke out to the upside above what is clearly a support and resistance barrier at the 0.76 handle. So in other words, the Canadian dollar has been strengthening against the Swiss franc, even though the number one reason to buy the CAD just simply isn't there. So what does this tell us? This tells us that the Swiss franc itself is the culprit. It's the reason this is falling. This has nothing to do with Canada, really, other than the fact that it's in North America. And what I mean by that is the Swiss, unfortunately, rely on 85% of their exports going into the European Union. There's no way in a situation like that that the weakness in Europe won't have an effect on the Swiss economy, so there you go. The market is simply running away from the Swiss franc. I know this not only because of this chart, but because of several other ones. There are many currency pairs out there that all look the same at the moment, and it's difficult to imagine that it's some type of coincidence. And what I mean by that is you have, for example, the Aussie Swiss. Yes, it pulled back a little bit today, but it's definitely looking strong and like it wants to break out. You have Pound Swiss, same type of move. We might get a little bit of a pullback, but certainly there is some support in this area. We also have Sing Swiss, same thing. It hasn't broken out completely, but it has made a higher high. It looks like it's going to come back and try to find support. So with all of these things moving in the same kind of general direction, you have to believe that there is some type of synchronicity here. With this, I believe that somewhere in this area we will find a supportive candle, and that'll be an excellent buying opportunity. On the other hand, if we break above the top of the candle, we should continue to go higher. I think we go closer to the 0.80 level given enough time. It's a longer term call, obviously, but certainly we have seen quite a bit of strength, and there's really no reason at this moment in time to think it's going to change.